Happy Tuesday, everybody. Welcome to the month of May. Today is May 4th, and yes, I will save you from the Star Wars reference for now. As promised, last week was a week that did not let us down. I didn't get the exact count, but as we discussed last week, Zacks Investment Research said that 900 companies reported earnings last week. That's just amazing. There was a lot happening last week, so let's get right into the roundup. If there's still a moment or two at the end, we'll hit a couple of other items. Monday started with a rally to all-time highs as we had strong earnings continue. They were strong enough to offset some soft numbers, economic numbers, and COVID hotspots around the world. The S&P 500 edged up about 0.18% for the day, but enough for an all-time high. Tuesday, the markets went into a little Fed-induced paralysis as we started a two-day Federal Reserve meeting. We'll keep talking about the Fed as it is such a major focus for us right now. More on that in a second. We did see amazing earnings from Tesla and UPS. So the market took Tesla and crushed it, and it took UPS and went up with it. So once again, just scratch your head on what the market's doing for short-term with market reactions. The 7-year Treasury auction was uneventful, which normally would not be worth mentioning, but you may recall in February, the 7-year Treasury auction was what turned yields, what started yields moving, which has now been contained, but that's what really had yields moving back in February. For the day, the S&P 500 was flat. Wednesday brought an end to the Federal Reserve meeting, mostly expected Federal Reserve announcement, and a pretty saucy press conference where Jay Powell took some pretty direct questions and gave some pretty direct answers, which, by the way, is not always the case. As former Federal Reserve Chairman Alan Greenspan used to say, if I turn out to be particularly clear, you've probably misunderstood me. Well, Powell did use the word froth in regard to the equity markets, and that led to some late-day sell-off, and the S&P 500 was down ever so slightly on Wednesday. Thursday, we saw a reversal in that. We seem to be seeing that a lot, right? We sell off one day, the next day we go up. So the market was reacting to very strong earnings from Facebook and Apple. We saw a GDP print that we talked about last week was going to be an amazing print. And you know what? As much as we knew it was coming, a 6.4% GDP number is just, when we are accustomed to seeing under 2% GDP growth, it's just a wow number. So weekly jobless claims were also encouraging. More on that in a minute. After a short time in the red, the S&P 500 actually ended up the day up 0.68%. On Friday, we gapped lower on the open as we saw some soft overseas economic numbers, and we also saw the last trading day of the month, so we saw some repositioning going on. The S&P 500 closed out down just about 0.75% and pretty much flat for the week. The U.S. dollar is back near the bottom of the most recent range. Gold is inching back towards $1,800. WTI oil is knocking on the door of $64 a barrel. Not to be forgotten, the 10-year Treasury yield continues to turn around the 160, 165 range. There are a few big events this week. Let's talk about them. First week of the month, we get the employment numbers on Friday, as well as the ADP numbers on Wednesday, and jobless claims on Thursday. We're going to continue to watch these because they are the major focus of the Federal Reserve and, of course, the major focus of the administration. What will be the next catalyst to take this market moving higher? That's the big question we're going to keep talking about. We have about another 300 S&P 500 companies with earnings this week. The earnings have been amazing. Guidance has been very strong as well. So the question is how high will estimates for 2022 earnings go? Because that's really going to determine how expensive or inexpensive the markets really are. So the market seems to have priced in so much good news. We keep getting good news and even better than expected news, with things like personal consumption coming in at 10.7% seasonally adjusted annual rate. And although we're starting to see inflation all over the place, the Fed is convinced that this is going to be short-lived. This one's the one that's on our radar, right? We're going to keep you informed of what we see, but that's something we're going to watch really closely. So we know that the news is good, and I'll talk about that again on Friday, but this is the time to make sure that we're reviewing your portfolio to be sure that your allocation is the way you want it to be. Please contact me, and we'll review your holdings and the allocations to be sure they line up with your goals. Remember, when markets are at all-time highs, this is the time to talk about if we should rebalance or not. Remember, there should be no surprise if we get added volatility in the coming weeks. I'll do my best to keep sending these videos to keep you updated, and we're also going to continue to try to send you our Friday planning videos, so to keep you updated on what's going on. So keep tuning in. If you have any questions, please call, set up a time to talk. It's going to be another great week full of incredible amount of news. So stay awake. Have a great week. Happy Star Wars Day, and may the 4th be with you. Sorry, couldn't resist. Have a great week.